Natural gas producer Spectra Energy just reported better than expected first quarter results. With an interview you will see first on Bloomberg this morning. We are now joined by the CEO, Greg Ebel. He's joining us from Houston. Greg, thanks so much for being with us. The company beat expectations. Part of the strength obviously is because of commodity prices. Do you see that continuing for the long term?
Well, you're right. We had a great first quarter, good running start for the year. Our fee-based businesses, which aren't affected by commodities, were all up double digits versus first quarter of last year. And as we look into the second quarter, commodity prices have strengthened further. Natural gas liquids, oil prices, and natural gas itself, and all that bodes really well for the next 3 quarters for us. A lot of expansion projects going on. That too is driving earnings. In fact, that was the big earnings driver in the first quarter. New projects we brought in. Pipelines in the United States, industrial loads in Canada, and big investments in Western Canada for natural gas. I
want to get back to the Canadian part of their earnings in just a minute, but I just want to ask you, what are your internal modeling? We're just curious, how do you see natural gas pricing going for the rest of the year? Because I know you have to quantify it.
Right. So we at the beginning of the year thought gas would be in the $4.25 range. It was actually a little bit lower than that in the first quarter, but now natural gas is sitting around $4.60, $4.70. So we'd expect it to be in that $4 to $5 range for the remainder of the year. And from a longer term perspective, $4 to $6, which is great for our business because the bulk of our business is building infrastructure for natural gas. Relatively low natural gas prices means that it's used for everything from home heating to power to eventually even natural gas cars. The president's very keen on us using all these new resources. That's great for Spectra Energy and its shareholders.
And Greg, of course, I have to ask you about your internal modeling as well for oil.
Oil we assumed was going to be around $90 for the year. Obviously much higher than that. That too bodes well for our earnings in the second, third, and fourth quarter.
And Greg, I guess we should point out to the viewers who don't know, the greater the disparity between oil and natural gas, the more money your company makes. Do you see the relationship continuing for the rest of the year? In other words, the proportion in the prices?
Well, I really do. Of course, oil is an international product, if you will, driven by things like geopolitical concerns around the world. Natural gas, with the great supplies we have here in North America, is now a domestic product, which is good on many fronts, but actually means, given the huge amount of natural gas we're finding, 100-year supply, and nowhere near the types of concerns people have expressed about oil, that I expect that differential to stay in place for some time to come.
But Greg, just to beg the question, I mean, are you hedging to try to lock in and protect the ratio as much as possible? We
don't hedge. I actually believe that destroys shareholder value. What we do is provide investors with our assumptions, and they can make their own views on that. You know, the crazy accounting that goes on with hedging, the large amount of collateral that's needed. We're in this business. We believe in natural gas. We believe in natural gas from a long-term perspective, and don't believe that hedging adds any value to our corporation.
You mentioned your business in Canada. We know half your people are there, half your capital. The Canadian elections saw, well, a strong vote in favor of lower corporate taxes. Any chance that Washington, D.C. picks up on that lead?
Well, I think it's a good indication, actually, what people are thinking. You know, in Canada, the corporate tax rate runs in the 16–18% here. Here it runs the, 35% or so. So half the corporate tax rate. You have much lower unemployment. You don't have any structural deficits. You have a very strong currency. You have better growth. I think that tells you something. You have better treatment of dividends up there for shareholders. You have better treatment of capital gains. That's at least a message, I think, to other economies, and particularly, the great economy of the United States, that maybe there's a different way to do things. And I think the conservative government up there seems to have found the right mix of economic policies, at least, to drive growth. And that's why we're investing so much up there.
And Greg, speaking of investing, can you give us any targets for 2012 and year out?
Well, we expect to invest in excess of $1 billion in expansion right through 2015. So you can expect to see us invest another $4 or $5 billion over the next 4 or 5 years, earn 10 to 12% returns on that. And, since we launched in 2007, if you take that through 2015, we will have added, through our investments, about $1 billion in earnings before interest and taxes from those investments. So pretty exciting time in the gas business, pretty exciting time for Spectra. We're happy with the first quarter start.
Greg, thanks so much for joining us first on Bloomberg. Greg Ebel, he is the CEO of Spectra Energy, and he joined us this morning from Houston, Texas.